Good morning, everybody. I am glad that you joined us today. I'm Ken Huffman with Captive Nation, and we're going to allow just another minute before we get going. I hope everybody's day's going well, and we're going to learn about some captive insurance stuff today. Just hold on just another minute. All right, well, I'm going to go ahead and share my screen with you so that you can see what I am seeing. There'll be a time at the end that you can ask some questions. Feel free to write those down and we will talk about those at the end. I kind of want to give you an idea of what captive insurance is. And really the big emphasis of this webinar today is, what does it cover? And so we're going to specifically target a few things that are very popular that's covered underneath a captive insurance company. What we do at Captive Nation is we create and manage captive insurance companies. That's what we do. So the business owner does not have to do all the work at all. We do and handle all the administrative tasks of that so they can enjoy the benefits of having a captive insurance company, but not having to manage it. So for some of you may be like, what in the world is captive insurance? Well, let me tell you about it. It's a private insurance company that is owned by the business owner. Okay. It's the premier risk management tool that's out there available today. And it's an incredible business strategy. It really is. And so as far as the structure of a captive insurance company is going to be owned by the same owner as the business. And so what you can see in this particular chart is you're going to have a business here. The owners are then going to start their own captive insurance company. It's not owned by Captive Nation. It's owned by the business owner. And the business will pay premiums to the captive insurance company. And then they will get coverage for losses that they have. Now, the great thing about this is that the business can deduct these insurance premiums that they're paying to their own insurance company as a regular business deduction. But on the captive side, that income that goes into the captive is tax exempt thanks to the 831B, and we'll talk about that a little bit later. But that gives you the overall structure. Why do captive insurance? It does three things. It's going to protect your business, decrease taxes, and build wealth. Now, when we talk about protecting your business, you're not going to replace all your commercial insurance. Okay, you're not dropping that. This integrates with the traditional commercial insurance, oftentimes lowering the cost of it. Now, you're going to have access to policies that are not available commercially. Okay, so right now there's things that your commercial insurance, they don't even offer, right? But within a captive insurance company, you can get coverage for that. And another great thing is that it's creditor proof. So the money that goes into the captive, it's safe money. You know, people are always trying to protect their assets, right? How in the world do we protect my assets? Well, a captive insurance company is a great way to do that because no one has standing except the business owner, and you are a licensed insurance company. And so that itself has its own protections because you cannot force the liquidation of an insurance company because that money in there is there to pay for claims. So here is a big list of a lot of different things that is covered by a captive. And what we want to do today is specifically look at a few of these. And in particular, we want to look at loss of a key client or contract. The thing I love about captives is that it gives you the ability to ensure revenue streams and limit expense exposures. And when I tell people that, they're like, what? Wait a minute. I can insure my revenue stream? Yeah. You know, sometimes you may have clients, maybe you got 3 clients that make up 80% of your revenue. And if one of them left because they either went out of business or they went to a competitor, or maybe they got bought by somebody, but you lose them, if you have a captive insurance company and have this particular policy, well, then you could get paid what they would have normally paid you. Let's say you would have brought in $500,000 from that one particular client that left. You would file a claim and get paid $500,000. Now remember, the money's not coming all directly from your captive insurance company, because all the policies that go into there, they're reinsured. Okay, and reinsurance is really cheap. So if something happens, like you lost that client, you would file a claim. Some of the money would come from the captive. Most of it would come from the reinsurance aspect of it. Same thing with the contract. There's a lot of people that have government contracts, and they bid on those every year. And if something were to happen that they lost that contract, they could get paid. In particular, there's an example of somebody, they build facilities for the border right here in Texas to house people temporarily. And so they are 100% reliant on these contracts from the government. Well, they started a captive insurance company so that if they lost that contract, they still would get paid. So, this is an incredible benefit. You're not going to get this at traditional commercial insurance. They're not going to offer it because they can't tell if that's going to happen or not. There's too many variables. But captive insurance is designed to pay you. So the policies are very wide in scope versus traditional commercial insurance. It's very narrow. That's why you have your gaps, exclusions, and things like that. So loss of a key contract, it's a great one to have as a policy. Here's another one, loss of a key employee. How many business owners have key employees that really run things? I mean, maybe it's a key manager, maybe it's a key salesperson, but they are vital to the success of the company. Well, you can ensure that if, God forbid they die or they leave to go to a competitor or start their own firm or something like that, you can get insurance that will cover that. And you say, wait a minute, to replace this person, I would have to hire like 2 people. Okay. Well, we insure that so that if that happens, you can hire 2 people. You'll have the money to give you, so you can hire somebody or 2 people to replace that person, and you're not, losing out. Same thing with like a salesperson. If they bring in, $1 million of sales a year and now they're gone and they took that business somewhere else, you would get a check from the captive for $1 million. So, when you're looking at valuing a company and keeping the value up, this is a great policy to have, because if you're going to sell in a couple of years, you don't want to lose that value. And this is a policy that will keep that high. Loss of a key supplier. This is another big one. Maybe you've been in business 20, 30 years and you have a great relationship with some of your suppliers, and they give you a great deal, right? And their competitors are maybe twice as much, but you know them, you've got a good relationship with them. But if they went out of business or got shut down, or there was a natural disaster or something happened and you had to buy from one of their competitors, what happens to your profit margin? It goes down, right? Because now you had to spend more on expenses. Get a policy that covers that, so that if that were to occur, it will pay you the difference between what you would have paid and what you have to pay now. Again, this way you keep your profits up, you keep the value of the company up, and it's a great benefit to have. So, loss of a key supplier, it could be equipment, it could be materials, whoever you do business with, it's a very popular policy to have, just to ensure you're going to continue to keep those profits up. Here's another big one, product warranty and recall. This is especially popular with the home builders that we have. When you buy a home, you get a warranty, right? But the home builder cannot deduct expenses on that warranty until the expenses actually occur, unless they have a captive. They may know that, on average, we end up spending about 1% of the value of the home on warranty, things that happen just on average. Well, again, if they don't have a captive, they can't deduct that expense. But if they have a captive and this policy, they can go ahead and deduct those expenses right from the beginning using this policy. So do you see how that helps you? Oh, why would you want to do that? Well, it's another expense, that you didn't have before, you're going to have, but now you get a deduction on your books today, saving you taxes right now. So product recall, warranty or recall. The recall aspect's big. Occasionally you'll hear of products being recalled, or milk that is being recalled because something's happened to it. This would cover those costs. It's extremely expensive for companies to do this. If it happens, they may go out of business. But if they have this policy and it costs $1 million to do this recall of all the product, you're going to be fine because you planned ahead. Listen, if you don't use it, you don't lose it, right? You have this policy because remember, the money's going right into your own captive. You're keeping that money. It's just now that went to pay for a policy that's going to protect in case you have a recall on your product, or you have to rework your product. Maybe it's a equipment issue. So that's another really, really big thing. Here's one that's really, really popular, especially right now. You may have watched Biden's speech last night, and he's saying that we may have an increase in taxes. That's a regulatory change. So you may be thinking, I have a client, they're about to sell their business. Oh my goodness, if the capital gains rates go up, I'm going to have to, they're going to pay a lot more. You can get a policy that will cover that difference between what the capital gain rate is now versus what it may go up to. Is that valuable? Absolutely. That gives them more flexibility of when they sell their business. Another thing, are y'all tired of COVID yet? I mean, right? It's crazy, right? Are there extra costs associated with that? Yes. I was at my kids' school today, plexiglass everywhere, right? Businesses, restaurants, they've had to spend money outfitting their restaurants with all this plexiglass. So because there's been a regulation change, they say now you have to have these things in place in order to open up and do business. That's a regulatory change. That is something you could file a claim on and get paid. That way it's not coming all out of your pocket. You see what I mean? So anytime a city, state government, or an association, or somebody that governs a business says, now you have to do this and it costs you money, that can be covered underneath a captive. Here's the next one that is really popular. Do you have any clients, or do you yourself own real estate? Well, if you do, you know what happens, and a lot of people are experiencing this right now during COVID, is they bail on their lease. They bail on, the tenant just either goes out of business or can't afford to pay you anymore, or they just decide we're going to work from home, and they bail on their lease halfway through. Well, that is a huge loss for the real estate owners, right? So this will actually pay you what they would have paid you. So if they had 4 months left on their lease and they leave, it'll pay you that 4 months. So is that extremely valuable? Yes, especially in commercial real estate right now. And so think about that. That alone is a reason to get a captive. All these policies I've talked about can be covered underneath one captive. And so obviously your traditional commercial insurance is not going to provide you rental income replacement. They're just not going to do that, right? It's too much of an unknown, but you can get it covered under a captive. So there's a few things that I wanted to point out that underneath a captive, what it does. And there's a tremendous amount more. What we do is we look at the client, we talk to the business owner and say, what keeps you up at night? What are you worried about? And then we design policies around that so that they can sleep securely knowing that their company is being covered. Now, another great benefit of a captive is that, it protects your business. It's creditor proof. And another big thing is that it decreases your taxes. And I'm a CPA, and this is one aspect of captives that I really like and a lot of CPAs like. You're able to deduct those premiums that's going into your captive insurance company. You're also, though, the premiums that go in there are tax exempt income, up to $2.3 million per year. Oh, wait a minute. Yeah, I'm moving money from here to here. I don't have to pay taxes here. I don't have to pay taxes here. Let me give you an example. Let's just say you got 500,000. Your business did great that year and you had 500,000. Well, if you don't have a captive and you're in the highest tax bracket, you're going to be writing a check for about 200,000. That hurts big time, right? You got 300,000 left. Or you could do a captive, get all kind of policies that covers your business, right? The rental income replacement, the key employee, key contract, all that stuff. That money, that 500,000 could go into your captive. Remember, I told you the income is tax exempt income. So now you don't have to pay taxes on that. So your taxable income goes to zero, and it's zero over here. You just saved $200,000 in taxes and protected your business so that you keep the profits up, so that you keep making money. Do you see the value in that? I'll give you an example. A lot of CPAs, what they'll do is say, hey, it's the end of year. You've made money. What do if we don't spend some money on equipment, you're going to owe a lot of taxes. So they buy equipment that they really don't need. And in this particular case, this construction company out of Arizona paid $700,000 of equipment, and they got to deduct it through the 179 deduction. But how much is that worth in 5 years? 200,000, nothing. Or you could do a captive. That's what happened the next year. They still spent $700,000, but instead of it going into a piece of equipment they really didn't need or want, it's going into the captive. The money that's in the captive can then be invested. And so now it's in an asset that appreciates instead of depreciates. And in 5 years, the value of that was $1.2 million. That is a net change or net change of $1 million. Now that's a lot of money. So, and they protected their business. So you see the value of a captive is tremendous. And you do get to get money out. People always ask that, well, I put all this money in. Well, how do I get money out? You take distributions and you do pay taxes at that point, but it's at lower rates. It's at capital gain rates. So when we talk about a captive, the third aspect of it is that it builds wealth, because the money that you pay, remember, you're retaining this. You're retaining all that money. You own the captive. And once the money that is in there to pay those premiums, it can be invested. So you can earn even more money. You invested in regular Wall Street funds, right? Stocks, bonds, mutual funds, ETFs, things like that. And then all the policies are reinsured, so that if something happens, I can again pull from the reinsurance, not just from my captive money. This also is going to reduce your traditional insurance cost. A lot of times what we can do is increase the deductibles, which drive down your traditional commercial premiums. And then if you need that money to pay for a higher deductible, we write a deductible reimbursement policy. So you just grab it from your captive. And that's how you can cover that higher deductible position. So there's other ways to reduce your traditional commercial insurance as well. And then there's a profit center aspect of it. When you go to buy a TV at Best Buy, what's the last thing they ask, at the cash register? Do you want the extended warranty? Anybody that produces a product, if you have any clients that produce a product, they can do the exact same thing. They can create an extended warranty. And again, it's all covered by reinsurance inside the captive. So you're able to create a whole new revenue stream for your client. Would that make them happy? Absolutely. It's a tremendous way to set them apart from their competitors. That's the big thing. They can either charge for the extended warranty or not, but it's a great deal for them. So, it gives them a kind of a competitive edge. So why choose a captive? Look, if you don't have a captive, this is your traditional commercial insurance. All this right here, your gaps, exclusions, deductibles, your key employee, your key supplier, all that, you're kind of self-insuring right now. You're just hoping nothing happens. You make money, you pay the taxes on that money, but you're not covered for all these different things. But if you form a captive, look what happens. I can move that $1 million or 500,000 or 200,000 into my captive by paying policy premiums. And in exchange, what do I get? All these different policies to cover my business, right? And so this is going to protect my business with maybe $10 to $30 million worth of insurance. So it's not dollar for dollar, right? So if I put in $500,000, that's probably $10, $30 million worth of coverage. I decrease my taxes and I build wealth because I have investment income and I might have new warranty income as well. So you end up financially ahead. You end up financially ahead whether you file a claim or not by doing a captive. You end up with more cash at the end of the day. So that's kind of a summary of what captive insurance is. The thing you want to remember is that, the operations, the primary purpose of a captive insurance company is for risk management purposes, period. It happens to come with a great tax advantage. All right. And a lot of owners and CPAs like that, but that's the main purpose of it. All the policies are actuarially supported. We use a third-party independent actuary who will measure what kind of risk you have, come up with all kinds of different policies, and then you can pick and choose what you want, which can change from year to year. Okay. All these are capitalized. These are all C Corps. Captive insurance companies are C Corps. And it's very important that you have risk transfer and risk distribution. And that is accomplished by participating in a licensed risk distribution pool that we manage. We handle all that aspect. So how long does it take to form a captive insurance company? You're looking at about 30 days, right? A lot of it has to do with how fast the staff can get us what we need. And we have just a list. So a lot of times it's way less. It could be as quick as a week. The first stage is feasibility. We do that complimentary for the potential client. We want to see what's the cost benefit. Does this make sense for them? What kind of policies could they get? What amount premium would go in there? Do they have the cash to put it in? So all these things have to be decided. And again, this is done free of charge for any client that you have. A captive typically works for any business that does 1.5 million or more in gross revenue. I don't mean net income, but if all their businesses, the total sales of all of them add up to 1.5 million, you want to look into a captive. And it doesn't matter what type of business they're in, because every business has risk. Now that risk, eventually, if they say, yeah, this looks good, this feasibility, let's go to the next stage. Well, that's underwriting. That's the next stage in it. That's where we hire the independent actuary that's going to come up with the exact policies and the exact premium amounts. We'll give you a ballpark figure in the feasibility, which is pretty close, but this is the next stage, is the formal underwriting study. And it's an important part of formation. So at that point, you're still not committed to forming the captive, but you'll have all the information you need. Then you say, yes, this looks good. We want to do this. That's when we form the captive insurance company. We handle all that. We form the corporation, we obtain the insurance license, and then we coordinate with all the insurance department, get the tax ID number, everything. And then we handle the ongoing management of the captive. So really, it's a turnkey deal, right? It's a turnkey deal. You're not going to have to mess with any of the administrative stuff. That's what we do. You just get to stay focused on your business. And again, a captive is going to protect your business, decrease taxes, and build wealth. So if you have a client in mind, feel free to give us a call. My office number is there. My cell number is there. Feel free to email me. You can just, any questions that you have, you may think, well, I wonder how this works, or I wonder if it would work for this particular client. Well, let me know. And we'll run a feasibility study on them and at no charge and see if it makes sense for them or not. So if you have any questions, feel free to ask them now in the chat feature or anything. Feel free to do that. Reach out to me. Keep this in mind as you have clients and think, well, how can I help them? This is a great benefit to help them with. So again, I appreciate you joining me. It was great. And my contact information is there. And we look forward to visiting with you again. Thanks, everybody. Have a good time.